Welcome to Short View Trading. My name is Chris Watling. I'm the CEO, Chief Market Strategist of Long View Economics and Short View Trading. This is your morning market hit for Monday, 29th of January. It's around 9 a.m. London time. So the question is, if you're a swing trader of equity index futures, you want to trade S&P equity index futures or NASDAQ or DAX or FTSE 100 or similar equity index futures on a 1 to 2 week basis, what factors should you be looking at? What should you be thinking about? How should you be going about deciding whether to go long or short on those equity index futures? That's what we're going to dig into in this video. And indeed, the first thing you want to think about when thinking about implementing a long or short trade is how's the market behaving? What's the shape of its performance? Where's the outperformance coming from? Are defensives leading tech? Or is another area of the market that's driving the equity market up or down? And in that respect, last week was characterized by quite a strong Monday to Wednesday with a bit of momentum lost on Thursday and Friday, particularly in the S&P 500 and the NASDAQ 100. Indeed, tech and semiconductors have been a big area of leadership over the course of much of January. But by the middle of last week, the FANG stocks in aggregate, as you can see from this chart in front of you now, were overbought. With that, we saw some stalling out of tech, some stalling out of semis. In fact, the Philly SOX semiconductor index was very weak on Friday. And there was rotation into other areas of the market, the small caps, the Dow Jones Transportation Index. Indeed, if you look at the weekly performance chart we're putting up in front of you now of the key US equity indices, you can see that underperformance over the course of the week by the Philly SOX and the tech, and the outperformance by the small caps and the Dow Jones Transportation Index. So last week was about rotation, and indeed the last few days have been about consolidation. If you look at a 10-day GIP chart of the S&P 500 or indeed the NASDAQ 100, they haven't done much over the course of the recent trading sessions. Indeed, the NASDAQ 100 is pretty much flat since January the 19th. Now, interestingly, we took off our long position in S&P equity futures on Thursday last week. The driver for that was what we saw in our short-term market timing models. These are 1 to 2 week models designed to generate buy and sell signals on equity indices on a 1 to 2 week basis. As you can see from the risk appetite scoring system we're putting up in front of you now, the model turned sell last week, in the middle of the week. This model is designed to measure fear and greed on a short-term basis, that 1 to 2 week time frame that we talked about, and generate buy-in signals as a contrarian indicator. In other words, you want to be greedy when the market's fearful and fearful when it's greedy. Added to which and complementing that signal, the short-term technical scoring system, which aggregates a bunch of technical indicators on the S&P 500 equity index, also pretty much reached sell in the middle of last week. Well, finally, as mentioned, the FANG's technical scoring system also had got up to sell last week. So the key question is, with all those short-term models on sell, is the market about to consolidate its gains, or is it going to roll over? And in that respect, there's an awful lot to focus on this week. There's a lot of key events going on that could have a major impact on the direction of markets. Firstly, of course, you've got the Fed on Tuesday and Wednesday with a press conference by Jerome Powell after that at 7:30 London time. On top of that, you've got tech earnings throughout the week. And then, of course, it's necessary to watch the oil price closely, given the rising Middle Eastern tensions with all that we saw happening over the weekend in that region of the world. So to see how we're playing it, please take a free trial to the Daily Rag, the Rag Trader. Simply click on the link below and we'll send you the Rag Trader for free for a bunch of trading sessions. And then you can see each and every day how we update our views on the market, how the market's evolving, how the model's evolving, and an explicit recommendation on equity index futures, typically the S&P 500 futures, on a 1 to 2 week basis, either long or short. Equally, if you're a subscriber, the email should be in your inbox around 8:30, 9 a.m. London time. So what are we watching today and this week? Well, it's a very busy week, as already alluded to. There's a lot of tech earnings over the course of this week. On Tuesday, we've got Microsoft and Alphabet, and then on Thursday, we've got Amazon and Apple. Second key theme, of course, the Fed Reserve meeting, Tuesday and Wednesday. Press conference on Wednesday at 7:30 London time, announcement at 7 p.m. No change expected, but what's interesting is any discussion about QT, ending that, and also whether or not the Fed tries to warm the market up for a rate cut in March. At the moment, the expectations for a rate cut in March have come off quite a lot in the last week or two, but let's see what the language is like from Jerome Powell. And then finally, there's a lot of data out over the course of this week, particularly in the US, culminating with non-farm payrolls on Friday. But we've also got ISM manufacturing on Thursday and some ADP payrolls on Wednesday. And then, as mentioned over and above, you've got to keep an eye on all the key price action, particularly the oil price and Middle Eastern tensions this week. So that's it from us. That's your morning market hit for Monday, 29th of January. Thank you for listening. Please do subscribe to these videos on YouTube. Simply click on the subscribe button, follow, like, and share on social media, or follow us on Facebook, Twitter, and on LinkedIn. Thank you for listening. Stay safe, trade well.